Welcome to the Roy Morgan Weekly Update. There's been little change in voting intention this week as cost of living, high inflation and interest rates and of course mortgage stress remain front of mind for Australians. The latest Roy Morgan survey shows the Coalition on 50.5%, up 1%, just ahead of the ALP on 49.5% on a two-party preferred basis. Now, although the major parties have swapped positions, if a federal election were held now, the result would be too close to call. Either major party, the ALP or Coalition, would require the support of minor parties and independents to form a minority government. This result once again highlights the importance of preference flows and the importance of the smaller parties to determine the overall two-party preferred result. Government confidence, whether people think the country's going in the right direction or the wrong direction. This was up slightly this week, but remains at a low level. 53.5% of Australians say the country's going in the wrong direction, while only 31.5% say the country's heading in the right direction. This means Roy Morgan government confidence is at 78, up 1.5 points from a week ago, but well below the neutral level of 100. Now, consumer confidence. ANZ Roy Morgan consumer confidence was virtually unchanged at 82.6 this week. However, this is the sixth week in a row that consumer confidence has been above 80, and it's the highest six-week average since February. Despite that recent uptick though, looking longer term, consumer confidence has now spent a record 82 weeks, more than 18 months below the level of 85. This week, inflation expectations were virtually unchanged, up 0.1% to 4.8%, and slightly above the 2.5-year low that was reached last week. So the ANZ Roy Morgan Inflation Expectations Indicator shows Australians expect annual inflation to be 4.8% per annum over the next 2 years. And now to the latest figures on mortgage stress, and the news is good as the impact of tax cuts and wage increases flows through. Roy Morgan's the only company to measure mortgage stress every month. The latest mortgage stress figures show 1.6 million mortgage holders, or 29.8% of all Australians with a mortgage are at risk of mortgage stress. Now this is down 0.5% on a month ago. This decline or softening in mortgage stress is primarily due to rising household incomes, which of course, along with extended pause in interest rate increases since late last year, has reduced that financial pressure on at least some mortgage holders. However, looking forward, the level of mortgage stress is going to be dependent on whether the Reserve Bank again decides to raise interest rates. Although the Stage 3 tax cuts have provided a boost to household income, they've also put additional pressure on the Reserve Bank to consider raising interest rates again. The latest ABS inflation figure for June 2024 was 3.8%, and this is still well above the target range of 2 to 3% that the Reserve Bank's aiming for. If the Reserve Bank were to raise interest rates in late September to 4.6% to counter that persistent inflation, this would lead to an estimated 15,000 more Australians in mortgage stress by October. All eyes will be on the next monthly inflation figures from the ABS due out later this week to give us an idea about whether there'll be further interest rate increases to come later this year. And that's a wrap. Thanks for your interest this week in Roy Morgan's latest results, and I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectations and voting intentions in Australia. Thanks for listening.